So Marine Money, that's the company we work for. That's the conference, Marine Money. What do we do? So we do our conferences, of course, in 18 places around the world. We have a magazine and a weekly newsletter. We gather information. That's what we do. And the interesting thing is we gather financial information about the shipping market. And we gather it from all corners of the globe and from all sources of finance. And so actually we end up with a great database of what's going on, what are the trends, who's doing what, and so on and so forth. And it's interesting to note, if you look over the years, you'll see that shipping finance has it ebbs and flows in different styles. I mean, if you go back to probably pre-2000, it was pretty much all bank debt. You didn't really find that much more, maybe a few bonds in the market, but it was bank debt. If you move forward a few years, you're going to find that all of a sudden, private equity came into the market, and there was a lot of investment in shipping from private equity. If you go a few more years forward, you'll find that Chinese leasing came into the market, and they made a massive impact. Where are we today? Well, it's quite interesting. I mean, today, the world is awash with liquidity, and our market is awash with liquidity. So in terms of lending or providing finance to shipping companies, who's got the most influence? Well, at this moment in time, it's the owners who have the influence, because they're very cash rich, they've got very strong balance sheets. The market is good, and looks as if it's going to stay pretty strong for the next couple of years. So what's happening in the market? Well, you can see up here that there's a lot of debt around as well. There's a lot of finance around. But, the owners don't need it in the same way as they needed it in previous cycles, because they're cash rich. So what's happening? A lot of people are refinancing their debt, which they took a while ago. And although the overall price of capital may not be cheaper, because obviously interest rates have gone up, margins, generally speaking, are falling. And that's simply because these owners, they no longer need 70%, they can live with 50%. The market looks good, the balance sheets are strong, the banks and the finance providers are very happy with the credit. So, generally speaking, and as a kind of a general trend, I would say that, margins are coming down, and this is just an example. Where it may not be the case is offshore. We heard yesterday from the panel on offshore that that particular panel, or that particular sector rather, still has difficulty in getting finance from traditional lenders because, of the nature of the business, and a lot of the banks are unwilling to do that offshore because of their ESG policy and the like. Nonetheless, banks are very hard at work trying to give finance. The banks are very busy, in fact. But they have to be busy because they're getting so much in repayments and prepayments that they have to run very hard to stay still. I mean, I was speaking to a European banker earlier on this year, and he said that in 2023 they had a record year. They'd given about $4 billion of new finance, and they had not grown their portfolio because the amount of money they were getting in repayments and prepayments was quite staggering. So if you can see on these charts, it's showing that actually compared to the last 2-3 years, from 21, 22, 23, 24, there's more finance being given at this moment in time, but it's just at finer margins. Again, in terms of offshore, the story is a little bit different. This is the graph which we bring out every year. This magazine here, which is around and about in the room, has got all this information on our portfolio analysis. So what we do is we survey the banks about their business during the prior year and where they are. So this is the 2023, end of December 2023 numbers. What's noticeable is the amount of leasing finance going on in the top 10, let's say, or whatever it may be. And interestingly, we also ask, what was the new finance that you did during 2023? The finance institution which responded to us, which had done the most finance, was Bocom's Leasing, which is probably not very surprising. If we dig a little bit deeper into it, we see that one. We have the banks only on the top, and we have the non-banks on the bottom. If you go back like 15 years, this would have been a completely different chart. The top 10 spots would have been probably about 8 of the top 10 spots or something like that would have been European banks. They were all very active. They were all doing their business. It was, to a large degree, plain vanilla financing. This has completely changed. And now the leasing companies and Asian institutions are much, much more influential in terms of giving finance to the global business. This one also, this is the volume of new business up there. Bocom's Leasing, like I said, was the one which had given the most business during 2023. And then you can see, if you look at the various institutions, a lot of them are either ECB institutions from the Far East or leasing companies. The one below is interesting. That's the change in portfolio size. And like I said earlier on, banks are having to work hard to stand still. This is showing you the net increase or decrease in the portfolio over the previous year. And you'll see that a lot of it is close to the line. It's like plus minus a few percent or a couple $100 million. And it's simply because there's so much prepayments and repayments going on because the market is so healthy that the banks are lending, and they're trying to lend, they're trying to do big deals, but the portfolios are not growing substantially, at least, simply because of the amount being repaid. So what do you do? We talked a little bit M&A yesterday. Vessel prices are high. Ship owners may not want to invest at this part of the cycle. Banks perhaps are a little bit reluctant to lend at this part of the cycle. So what we're seeing is more M&A, I think, in shipping currently than we've seen for a long time. Again, in the chart at the bottom, it shows the volume and the number of deals. This is for this year to date. It compares favorably with previous years. And some of the transactions that we've seen, again, we talked about some of these yesterday. We have a couple of them in the room, actually. We've got ADNOC with Navigate. We've got MSC with Gram Car Carriers. We've got Cetus with Nachipa, and so on and so forth. This is something that you wouldn't probably have seen not too long ago, but because of the current state of the market. And like I said, these things, they ebb and they flow, they come and they go. But for the time being, for a lot of these companies, an M&A transaction is more attractive than buying or building, individual vessels and getting finance. The public markets, are doing relatively well. There's always an issue with NAV with shipping stocks. But if you purely look at the price of the stocks, then they've all done pretty well, I would say. I mean, that's from the September 23, 1 year ago. So everything is up 100% plus, In the last few weeks, I think there's been a turnaround in a couple of the sectors. It'll be interesting to see, where they go. But, we are a US organization. We're based in New York. A lot of the information that we gather is the US public companies. And there was always an issue, like I say, with NAV, and most public companies were dissatisfied with where they were vis-a-vis sort of their private counterparts. At this moment in time, I think things are a little bit better than they have been for quite some time, and it looks as if it may continue. So that's where we are with marine money. I mean, where's the future? Goodness knows. But the fact is, we do gather a huge amount of data. It's very interesting to look at our databases. If any of you are interested in getting information You can either subscribe or you can approach me, and I can help you to sort of access deal data or some of the articles, and so on and so forth. A lot of ideas. You probably saw a thing in the press recently saying that, you know, a $1 billion deal was sort of initiated in a discussion on the platform at Marine Money in New York. Well, you know, who knows whether that was the case or not, but the fact is, these conferences are a great place for people to meet each other, to discuss, to hatch ideas, and from time to time, you know, those ideas come to be. So that's my opening presentation. Again, thank you very much for coming along here on the second day, and we will continue now with the rest of the conference. Thank you.